Good morning, everyone, and thank you for joining me in today's daily market review. It's the 5th of February 2021. Today is Friday, the last day of the trading week. This is Mohammed Yaoud, Head of Market Research at CJC Markets in the MENA region. As usual, we'll have a couple of topics to discuss. What happened yesterday to the dollar trading, what supported the dollar or pushed it to extend the gains above 91.50, and what also happened to gold trading, why it actually declined around $30 just 2 hours into the US session. We will discuss all of this on the charts, so please stay tuned. Welcome back, everyone, and thank you for being here. So basically, yesterday we had the numbers for the US initial jobless claims. The numbers turned out to be positive. This comes one day after the ADP non-farm payrolls, the indication for today's numbers. So we had 2 days of following positive numbers on or regarding the labor market in the US, which was super positive for the markets. This basically indicates that today we might be strongly expecting a positive number on the BLS NFB or the NFB from the Bureau of Labor Statistics. So basically this supported the markets. This supported the risk on sentiment. People went to trade risky assets, and that's why this actually pushed the dollar index above 91.50, and that's why gold traded below $1,800 per ounce, and we'll have a look on the charts real quick. Please be aware that today at 1:30 GMT we're expecting the NFB numbers. This greatly affects the markets. Specifically, that's the most important numbers that we look for from the US market each month. So please be aware that this might affect the market volatility today. Please stick to the money management rules just to avoid any greater losses than expected or than desirable. So let us have a look on the US dollar. Yesterday we mentioned that our key levels on the 30 minutes time frame were basically 91.30 to the upside and 91.08 to the downside. We did manage to break above this higher level, which was expected, and we did target the zone of around 91.48 on the US dollar. So today basically we have our two major key levels, which is the highest high that we have created on dollar since yesterday, and this level, which is around 91.45. Any break to the upside should continue our positive view on the dollar index, and any break below 91.45 should be bearish to start a correction. Bear in mind that we are having a couple of negative divergences, which is a double negative divergence. We have one here, okay. Just a moment. Here we have a high negative divergence, and again a negative divergence here. So basically, as per the technical view, we are bearish on dollar trading for today. We are waiting for a break below 91.45 so we can continue the move to the downside. However, as we mentioned, please be aware that we are waiting for the NFB numbers, which might turn out to be positive. So in this case, this supports the bullish move on the dollar trading. Let's have another look on the pound dollar. Basically, we did say yesterday that we need to confirm that this is a confirmed break below 1.3610, just to make sure that we are bearish on the pound trading. What happened is, during the Bank of England interest rate decision, which turned out to be a positive one, Bank of England decided not to increase the quantitative easing program and stayed around the same levels, which is around 895 billion pounds. This was super positive and bullish on the pound versus all of the currencies, and especially versus the US dollar. We did trade above those levels one more time, which was bullish for the pound dollar, and this basically turns out to be a false breakout. What we are waiting for today on the pound dollar, since we are back again into this trading range, that's a rally, then we're having a correction. We will be waiting for prices above those levels or around those levels, 1.3721, so we can sell short on the pound dollar to target the support levels at around 1.3650. This is our view on today's pound dollar. Bear in mind that at the moment we don't have any trading opportunities. We are just in between bullish or bearish. However, once the pound dollar rallies to this support, this resistance level, we will be bearish on the pound dollar to target the support zone for today. The dollar yen was doing brilliantly. Yesterday we mentioned that our target should be around 105.67, that we barely touched of around 5 pips difference, and now again on the dollar yen we're having a double negative divergence. So basically, as long as we trade below 105.67 on today, we're bearish on the dollar yen to start a major correction, because we have been super bullish on the dollar yen for around 4 or 5 days. So I think it's time for a major correction on the dollar yen. However, as long as it trades below 105.67, which is our key resistance level on the pair. That's the key level that we are talking about. So as long as it trades below this, and if you can see that on the 4-hour time frame, we are already starting to give some bearish price action. So the dollar yen for the day is basically bearish. The dollar Canada succeeded in breaking above the trading range that we mentioned. It confirmed the break above 1.2810. We retested it, and off we go to the target that we mentioned of around 1.2845, and the margin was around 34 pips. So we delete this. Currently we have no good opportunities on the dollar CAD. People might have sold the dollar CAD from those levels to target that support. However, if you didn't have this trading opportunity, we will be watching the dollar CAD during the day, either touch to the support or to the resistance. Would be a ping pong trade inside the trading range. Let us have another quick look on the dollar, on the gold trading. Basically, gold is trading inside a super big and a super strong support zone that could be available on the weekly time frame. Those resistance zones that we had back on 2011 and 2012, we're basically trading inside this level at the moment. So we're kind of bullish on the dollar during the day, on the gold, sorry. However, we just need to give our targets. That's the decline that happened yesterday. Any break above $1,800 is bullish. However, staying below this level is bearish on gold trading during the day. So that's the 50% retracement of the move from yesterday. If we stay below this level, we will be targeting 1776. However, staying above 1800 will be bullish on the short term on gold. Again, please be aware that today we're waiting for the NFB. Volatility is expected to be high on the gold trading. So that was all for today's video. Thank you very much for following us on today's daily market review. Have a nice weekend. We'll have another video next Monday. Thank you very much for watching, and please stay safe.
CJC Markets is a leading global financial institution that has granted a derivatives issuer license issued by the Financial Markets Authority New Zealand. CJC Markets has a wide range of products, latest technology platform, and eminent customer service. CJC Markets offers superior execution, competitive spreads, and low transaction costs. CJC Markets. Smart trading, smart life.